Hey, Walter here, and I want to talk about a concept that I talk a lot about with the students that I work with, the traders I work with, and this is the idea of using complementary systems. Now, we know that typically we're going to trade systems that we believe in that make sense to us over the long haul. It's really difficult to take a strategy that somebody else has taught you and to decide that, you know what, I'm just going to trade that. That's can be very difficult. So, for example, this chart right here, this 1 hour chart on the pound Aussie, you can see here I've drawn a consolidation box. So, and the reason why I've done that is because typically, and by the way, if this stuff, if you find this stuff to be useful, like this, if this resonates with you, you might be interested in our course. It's the Small Accounts Big Profits course, and you can go to bigprofitscourse.com to learn more information about that, or click the link below or above this video. Now, in this box here, I've drawn a box here to contain the consolidation. Basically, from about this point onward, we could say that this is basically a box. We've got two touches up here at the top, at least maybe three if you count that one, and we've got two touches down here at the bottom, maybe three if you count that one, but you don't necessarily have to count that one. And so going forward, we'd be looking for buys at the bottom of the box and sells up at the top. And you can see later we got some sells, or some touches up here. There's a sell right there. And there's another one right here. Right there. And of course we had a buy right there, and potentially a buy right there, and potentially maybe a buy right now. Who knows? You got about 37 minutes before the current candle closes, so we don't know what that's going to look like. But it could look like a kangaroo tail. Who knows? So that's a simple strategy to basically trade kangaroo tails, which are defined as, I wrote about them in the Naked Forex book, but essentially you had to open and close in the top third for a bullish kangaroo tail, a long tail that extends beyond the recent price action, which certainly is the case here. I'll zoom in so you can see. I know sometimes it's hard to see on these recordings, but basically see how it's that candle is printed at a unique area of the chart. So that would qualify. Here, let me show you. It's this one. So you can see here, if I take this much of the candle at the bottom, it's printed at a unique area of the chart. So there's like no price action here for this much of the candle. That's good. It's also on support here because that's the bottom of the box by definition. And the very next candle trades higher. So I put a buy stop a few pips above the high here, stop loss below the low of the tail, and I trade to the other side of the box. So that's a consolidation kangaroo tail. Pretty simple stuff. Now, so this will work well if the market's directionless and we can define a support and resistance level. Wait for it to get to the top. We don't have any bearish kangaroo tails up at the top. We do have a bearish big shadow here, but that's a completely different setup. And we would look for bullish kangaroo tails at the bottom, which potentially we have one maybe right now. We'll see. And in terms of another system that may work, say during trending markets, you could look for, let's see, for example here, we could pull anything up really. This is the Canadian dollar 8-hour chart. Let's see if we can find, that's actually not a very good example of a trending market. So let's see if we can find a better trending market setup here. So with the trendy kangaroo tail, what we're looking for is a market that's making lower lows and lower highs, or higher highs and higher lows. And then you get a pullback, and that pullback is punctuated by a kangaroo tail. Just like we saw before, the difference is you typically get either a box or a like a bearish flag. So this would be like a bearish flag. The market's moving against the downward trend here, and then boom, it's punctuated by a kangaroo tail, and that's your sign to sell. Here's another one right here. Again, it's ideal for me to see like 3+ candles before you get the trendy kangaroo tail. In this case, we actually only get one or maybe two, but it does trade lower, and you would have been stopped out certainly on that one if you would have taken that one. In fact, you would have had another one here, but again, the market's just started to fall here and hasn't taken out this low. Typically, you'd want to see the market take out. Here's one. Here's a bullish one. That doesn't qualify. see if we have any more here. Actually, let's go to another pair. I want to give you some bullish examples. Maybe euro. Let's see here. Any bullish euro setups? Not really. It's pretty range bound, really. This would be the kind of market where I draw the box and look for. That's a kangaroo tail, but that's not really in the midst of a trend. You know what would be good though? The euro kiwi. I know for a fact. Hopefully on this time frame too. There's one right there. I think I actually took that trade. So this is the classic. So the market's making higher highs and higher lows. You can see the retracements get a bit wicky, and the candles go bearish, and then boom, it goes bullish, and then the pullback. So this is the absolute classic trendy kangaroo tail. So by trading both of these naked strategies, one defined by the trend, the pullback during a trend, and the other defined by simply a consolidation box, what happens is when the market's trending, the trendy kangaroo tail starts making money. And the boxed one either doesn't have signals, or the signals might get stopped out. Obviously, if you're on the right side of a breakout, you'd be fine. But half of them will probably be stopped out if the market decides to start trending after you draw your box. And likewise, sometimes at the end of the trend, these trendy kangaroo tails will stop working, obviously, but you might then see a consolidation box, and then you can start trading the other one. So that's really what I mean by complementary strategies, where you have two different types of strategies. These are both very simple, and both of them can take advantage of different types of markets. So this is really what you're looking for. And if you want to learn more about trading different simple naked strategies and how we're going to ramp up a small account, $1,000 account up to 100,000, that's the goal in these small accounts big profits course. You can go to bigprofitscourse.com, learn more about it. Click the link below this video. Otherwise, we'll see you in another video. Take care. Bye.